We are back at the Reg.A Money Show. We're talking to Darren Marble. We got great stuff going on from CrowdfundX. And Miguel, let's get back into this whole conversation that you talked about before.
Yeah, no, this is great, and thank you guys for returning with us here on the Reg.A Money Show. And again, joining us all the way from California, we have Darren Marble from CrowdfundX, who has been gracious enough to join us here on this newsworthy day. The very first, guys. I mean, you guys are not. We are here on a record, on a historical day. The first Reg.A Money, the first Reg.A Plus Tier 2 offering has gone to the New York Stock Exchange, being traded as we speak under symbol M as in Michael, Y as in yellow, O as in orange, trading at $7.40. If you guys can believe it or not, they've actually pierced that threshold, and now we have our first OTC market back with Ilio, which, Darren, I know that you were involved in, and man, you know, that gets you a big pat on the back. But this new one going all the way to the New York Stock Exchange, this is unbelievable. Everybody has to buy around. Everybody has to buy around for Darren.
Yes.
Well, thanks, guys. Look, I mean,
go ahead.
I was going to say, I really appreciate it, and I would be remiss not to mention the other partners that brought this deal to fruition. I mean, what's really interesting about the way Myomo achieved its listing on the NYSE MKT is that we took a hybrid approach to the offer, and what that means is that there was an underwriter in the deal, TriPoint Global Equities. Their CEO is Mark Alenowitz. He's also the CEO of Bank, which is the digital banking platform where we drove traffic to, acquired retail investors. And so, Mark created a syndicate of brokers, went out to those brokers, and took orders from the brokers in parallel with CrowdfundX running our campaign in parallel. So it was a really interesting approach. It's really something that had only been theorized as a possible avenue for an issuer to achieve this type of listing. And now it's really been proven that an issuer can effectively raise capital, raise money from both Wall Street and Main Street investors under one umbrella, under the same cost basis.
Which again, that was a theory. I mean, you and I have had conversations outside of the show, Darren, where we've talked about, should I get an underwriter? Should I not get an underwriter? And I mean, I can't tell you how many times Ron and I on our show, or somebody has called in or sent an email and saying, such and such group wants to work with me. They want to syndicate the deal, but they think we should go under a 506 and not really do a Reg.A at the beginning. So we've heard a lot of this noise about, can you do this? Can you have a syndicate? Can you have a syndication of a Reg.A and it work? And everybody inside of Wall Street being accepting the Reg.A offering, and not like your traditional private placement, where some people, you have an underwriter and then they syndicate it and then it goes out on the street. This is unprecedented because, Darren, as you and I know, and Ron, we talk about this all the time on the show, what has just happened is that you have now seen, the broker-dealers and Wall Street actually meet the Main Street guys in the middle and said, guys, we're going to go to all the investors together because we believe that we do have a combination here. We have a company that has a great technology, that has a great social story, and that is doing good. And then we're gonna parallel the efforts of CrowdfundX and Wall Street. So you had a meeting of both Main Street investors and Wall Street investors all coming, and what you're seeing, a product of that is, of course, the listing that happened today. So this is just phenomenal. So Darren, a lot of our listeners are small cap companies, are investors, and they're all looking for that one essential thing that's going to get them that capital infusion that they need for their businesses. And here on the Reg.A Money Show, Ron and I are a big proponent of Reg.A Plus Tier 2 because of the auditing and because of the uplisting capacities of the Tier 2. So with that all being said, because we've all covered that on a show, and what we'd like to do is, we were bringing you on today, and it just happened that we had this great news on Myomo. But besides that, what we really wanted to talk to you about and what we really wanted you to share with our listeners, and you have done that already, but what we really like to talk about is that budget that you were talking about more about CrowdfundX and how CrowdfundX can help somebody who is considering a Reg.A for their business, and how they would use that fund and what you think a good amount, because a lot of these guys are developing their little war chest, and so they know they got to pay for the PCAOB audit. They know they have to have their SEC attorney. They have to have their EDGAR agent. Maybe they got to put in a little percentage for their broker-dealer. And then I also want to talk to you today, and I really want you to try to give us, your best guesstimates on, what a great crowdfunding with zero footprint. So we're talking about another type of, Myomo. We're talking about a guy who has no Facebook presence, no email. What something like that would look for? What are you looking for a budget? And then we can also talk about what somebody who already has created a nice affinity group, what they're looking at. So could you please give us maybe Darren's top 3, costs and, where those dollars should be spent?
Sure. So I think, a good starting point on average is, for every $1 million an issuer wants to raise online from the crowd, they should set aside a $50,000 marketing budget to attempt to achieve that outcome. So that's 5%. So if you're out there pumping your chest, you want to raise $5 million online, you'd better have a $250,000 marketing budget. And this is just the hard truth that not a lot of issuers really understand. Money does not grow on trees. There was not a crowd out there waiting to throw money into Myomo. It was really hard to find the right investors, even with the technology that we've discussed. But I think 5% of the crowd campaign target is a good starting point. And that budget, at least for us, might be split between technology, services, paid media. There's different ways we can allocate those dollars. And look, truthfully, in some deals, an issuer may need 10%. If they want to raise $500,000, and they have no starting point, they may try to allocate may be wise to allocate $500,000. And so, I know what most people think when they hear this is that's a really high cost, or, I might be willing to do that if I could afford the budget. How do I get that money? I'm raising money, so there's some irony in all this. And there's different ways to accomplish that. So, look, one observation is that if you're a pre-revenue, pre-product startup, you're not a good fit to go down this path, period. So we're looking in our business model to work with established companies that have operating history, that are generating millions of dollars in revenue, maybe have EBITDA, net income, et cetera, have been around for a while. This is not, fantasy capital raising out of the sky for these early stage companies. So a lot of the companies we work with, they do in fact have these budgets because they're running profitable businesses already. Now, for the exception companies that are on the smaller side, that may not have the budget, there are, new providers of capital for these campaigns. David Metzler at Serenity Venture Partners, Sonny Barkatz, Thundercrowd Capital, Lou Bevilacqua. There's a couple people that are actually building really interesting practices to provide bridge loans for Reg.A issuers that may have a shot at success but don't have that marketing budget, because usually the marketing is the biggest spend in the whole deal. So you've got your costs for the legal, for accounting, as you've mentioned, and marketing is usually the highest cost. So there are a couple bridge lenders that we know and work with that are really looking to find companies that don't have that $200,000, $300K set aside for marketing, and will potentially provide capital if they deem that issuer to be a fit. So that's just kind of a ballpark. The other approach is, again, if you're a company like Myomo, realistically, you're going to need more than just an online campaign. You'll probably benefit by having a broker-dealer involved, an underwriter. And again, that's part of the philosophy with this hybrid approach. We were trying to mitigate risk. We thought that if the issuer could effectively raise capital from different types of investors, including institutional, retail brokers, and the crowd, that they were, kind of hedging their bets, and that strategy worked in this, mini IPO where $8 million in total was raised. Just to clarify, that was $3 million from existing shareholders and $5 million between retail brokers and the crowd. So, I think that's something for these issuers to consider is, bringing in multiple partners, because this is not easy to do, or they're going to need to have some dedicated budget, maybe even a substantial budget, to put themselves in the best position for success and take advantage of the ability to generally solicit.
Yeah, the general solicitation is the key to the crowd. I think, we've talked about this multiple times, Darren, and that's why we thought that you coming on the show and being able to enlighten our listeners and everyone who listens here on the Reg.A Money Show, and how important it is for the company to be able to have those funds allocated to their marketing campaign, because we were also always, and we've always believed that anywhere between 5 to 10% is the true mark. I mean, you need to be able to allocate say 10%, or maybe even anywhere between 5 to 10% for your professional fees, and then on top of that you were looking at the marketing. So we have always believed in creating of the crowd, accessing the crowd, or even fortifying your crowd, even if you had a really good crowd, just being able to educate them. Because what we're talking about here in the general solicitation, which is unlike the other types of investment that people see, we're talking about non-credited investors. And non-credited investors are guys who don't see these opportunities every day, Darren, and they need a little extra education. They need a little extra information. They need to be touched where the most of the marketing that Wall Street has done and most of these broker-dealers have done, is not there. Like, for example, I saw Myomo back in February at the NYSE conference, and they were like, three tables away from us. We had a different presenting company, and that's when I found out that they were doing their Reg.A. And, a lot of the broker-dealers, that it was a process of, that's why I think that Bank X did a great job, because bringing in, I forget what was the name of the global equity, what was the name of the company, the underwriter, the initial underwriter, the initial one?
TriPoint Global Equities.
Yeah, TriPoint. I think TriPoint did a lot of good work in the sense of educating other broker-dealers on how they were going to be impacted by this deal. And so instead of they for them to do what they were doing, because I was listening to a lot of those conversations, and a lot of the presentation that they were doing was, hey guys, this is what we're doing, and this is what the company is doing, but this is what we need for you guys to do. And I want you to understand, guys, when Darren's saying, an underwriter is a broker-dealer, and we've talked about the function of a broker-dealer in a sponsored event, which means if you look up the A1 filing for Myomo, you will see that they listed TriPoint Capital in there, and their percentage of that offering has already been discussed. It's already been approved, and everything is by the book as required by the filings to the SEC under Form 1A. Okay, so understand that that's what Darren is talking about, is funds that you're going to need outside of your raise to be able to have a successful raise. So that was $5 million of new money coming in, the way that you explained it, $5 million, and that was broken in by $8 million total, 3 from existing, and $5 million from new. So we don't know exactly how that broken up and the percentage of what was brought in by the BDs and what was brought in by regular Main Street investors. And eventually those numbers will come out. But we do believe, and that's why if you're considering your Reg.A and you are looking to do a marketing program, you need to align yourselves with companies like CrowdfundX. And then, why do you guys stand out among everybody else? Because Darren, you have to understand, we get calls from all types of crowdfunding portals. We get calls from all types of marketing companies that they have the answer solution. What do you think is that one thing that sets CrowdfundX apart from everyone else?
Look, at the end of the day, moving forward, it really is our technology. And it was technology that was built from insights gained by marketing the industry's most successful campaigns, as well as campaigns that fell short or even campaigns that failed. So we've had first movers advantage in getting in to work with a lot of these early deals, and we've taken those insights and we've now developed technology. And I should mention, my partner and chief technology officer, Eddie Ibanez, who developed this technology, he's no stranger to the AI software community. In fact, he's